Okay guys, so these markets are really wild right now. You see the Nasdaq hitting the ATR here. What we can expect, no matter how much buyers are in the tape right now, the majority of the times the market just reverses in this level. We need to wait.
Order
Okay, buyers
submit
in the
long
tape.
signal
See
and
this batch
queue.
of buyers here.
Order filled.
Okay, we're gonna give it some room. We see buyers in the tape. That was lots of buyers. We see imbalance to the upside in the ES.
Target long order submitted.
Okay, there you go.
Order filled. Long signal. Target
Okay,
filled.
target hit first.
Target
Okay,
filled.
second target hit. Okay guys, I'm gonna
Long
exit right now.
order filled.
Okay, that was a $600 trade. We got a long here in the RTY again.
Long signal and queue.
Okay, as you can see in the chart in
Long
the
signal
Nasdaq,
and queue.
I already have a 4 and a -4, as you can see.
Long signal
Okay,
and
so
queue.
you see the 4 and the -4 here. And why is that? Because you can to the Bidaskmultimarket correlation, you can add another instrument. Okay, so let me show you. Okay, we almost got the target here in the RTY. At least to get the first target out.
Order cancelled. Target filled.
Okay, we got first target out, so it's a break-even trade. So no matter what happens here, we're not gonna lose. So I was telling you about the Bidaskmultimarket correlation. You can add more instruments, guys. So I added the RTY. That's why you see a 4, because it's telling me that we
Long
have 4
signal and
instruments
queue.
inside that are correlating. If you add another one, a number 5, you can add over here, for example, instead of the RTY, you can add Apple, but you need to have stock data from Kinetic, and you need to get the basic package, and you can add that instrument here. So that way you will see without looking at the chart that that the Apple, Google, okay, those big companies are going long, which are those are the main instruments that the people have is using as tells, because those are the ones that have the more volume. Amazon, for example, is a big company. Tesla, okay, so you can add those instruments here. You can add the market breadth indicator, okay, which is the tick from the New York Stock Exchange that measures all the stocks, going up or down. So you can add that instrument here too, so you can have a correlation, and the more you have, the more it will print. If you have 5, 6, it will tell you how many instruments you have. Okay, so that way you can add more confluence to your trading. Okay, so that way you will have more information in your charts. Okay, so that way that's what I wanted to tell you about, that you can add another instrument, so get the max potential of your indicator. Okay, so you see over here the time and sale, how it broke. You see, if you don't have this information, guy, in your charts, it's I don't know, it's very difficult for you to understand the market. So you see these guys here, they already know where they were. You see the pullback. You see the pullback here in the Nasdaq. You see it touched the ATR and reversed, did 2 reversal bars, and then broke up. Okay, so this is the V pattern that I always talk about. You see here, they tagged the ATR. Do you think this is coincidence? This is not coincidence, guys. This is a measured move. This is what everybody is seeing. Because how about you talk about Fibonacci and all that? You need to be measuring, and let's keep it simple. So this is what traders do. These guys, big institution guys and everything. This is what they do. They don't mess around with all those Fibonacci's and all that thing. You need to be measuring, and the accuracy is not that great, because it's not like a pattern that everybody is gonna measure exactly the same. The ATRs and the uniranker bars are universal. Okay, so that way I'm gonna exit the RTY.
Target filled.
Okay, great trade, guys. exactly, correlation that up. And for example, you don't measure the same, so why bother with those Fibonacci and all that thing? What you need here is order flow. Just look where the market is going to break up, break down, just wait for it, wait for it. And trade what you see, guys, not what you think. Because if you think that that you're thinking about something is going to happen, no, just use the order flow, which is the time and sales, the visual imbalance. It is screaming to the upside. You see three prints here in the same bar, so that was a complete breakout. Okay, guys, so I just wanted to tell you about that. And like I told you, get the max out of your Bidaskmultimarket correlation. Of course, if like I told you before, if you want to add more external data, for example, from the stocks, you need to go to Kinetic and buy the basic package. It's like about $55 a month or something like that. And that way you will have more correlation from the bigger stocks. If Apple is going up or Google is going up, and or down, you're gonna have that information on your charts, and you're gonna be more aware of what a more explanation of why the time and sales is so red or is so green. That way you will understand better. Okay, guys, so thanks for watching, guys. If you're interested in the system, there's the link in the description of this video. You can contact me. I will be happy to send you information. Thanks for watching.